Hey guys, Mike here. So, oh boy, what a day in the market, and boy, was it super volatile, that's for sure, and ended up being super green at the end after Jerome Powell said something, which I don't think that's what drove the market up. I think it wanted to go up anyway, like we talked about. We just hit November. But that was, I mean, this is a jam-packed video for you, by the way, and we're going to go over basically four things you don't want to miss that are extremely critical to be aware of. But I'll say this real quick. Jerome Powell, I rewound it 3 times. By the way, I listened to the whole thing. Don't ever waste your life listening to that. You will never get it back. It's super boring. We could go ahead and give the speech. But there was one part I rewound it 3 times to make sure I heard him correctly. He didn't say they were done raising rates, but I will say this in all honesty. By the way, they didn't raise rates if you hadn't heard yet. But it was the closest I've ever heard him come to saying we're done. I mean, I rewound it 3 times. I was like, did he just say they're done? But they kept pressing him on December, about another rate hike and all that stuff, and he kept kind of dodging and saying this and that and the other. But it was definitely the closest. And I personally think they're done. But the truth is, let's be honest. Does it matter? Like, what's one more rate hike? You've took it from 0 to 5.25, 5.5, whatever we're at now. Like, one more rate hike. It's not about the end be all right here. It's literally the pace he did it in. That's what finally is starting to take real effect. So one more rate hike, sure, the market will try to price that in if he's going to do it. I just think if yields stay up, I think it's game. Game set match for them, and they're fine where they're at. So maybe they do one more. I don't think it even matters if they do one more, to be honest with you. But I will say, because just keeping them up at these levels, right, for a lot of these companies is a problem. And he mentioned that. He said, when they went to go to West Virginia, I think it was, to interview small business people and everything, they were getting crushed. And I've showed you that. They're the ones getting screwed over. Like everyday Americans, and that's what he talked about too. Everyday hardworking Americans and small businesses. That's the one getting crushed. The big companies I've showed you, like the Microsofts and all that, man, they're loving life at these rates because they're making money. They're making a lot of money at this, right, on their interest because they have so much cash. They have billions, hundreds of billions between them, right? And so they're loving it. I'll show you a chart on that tomorrow. The other thing was the Treasury, right? How they're going to raise. You might notice yields dropped this morning. Did you see that? But how they're going to raise all this debt, right? It's going to be 76 billion less, which, tomato, we have $2 trillion in deficit. I mean, none of that's going to mean anything, but it's the way they're going to raise them, and they're going to depend a lot on treasuries, the bills, not the bonds, from what I'm understanding, and then also the 10, 20, and 30 year, which they were struggling to get people to actually really want to come into and buy when you just buy a 2-year and get more for really, as far as the yield. And people were really paused on that. They're not going to increase what they thought they were going to do to that, which of course could help. The yields might go back to 5, maybe a little over 5, but even if they just stay like somewhere in that level and don't just start spiking way up, like people, because that was the fear, was like, oh my God, how high is it going to go? Is it going to go to 16%? Like that one guy said, and in 7 years it'll be 16 or 13%, whatever it was. It just is ludicrous. If it does, it's game set match for us. By the way, I'm just trying to tell you that's the truth. If it ever gets back to that, can you imagine? Oh my goodness, because nobody ever going to the stock market. I just put my money in something and just draw 13%. Risk free. What the heck? Why not? But can you imagine the shape we'd be in with our debt and everything? Deficit be $5 trillion by then or something. So anyway, but that's kind of what happened throughout the day. Okay, now understand this right here. What's holding this whole thing up right now is people with a lot of money, right? And this is what usually holds us up in this time of need. The contribution to average annual expenditures, income, and when you look at this is the high yield earners, right? Way up here at the top. First of all, look how big those two spikes are in 2021 and 2022 versus like going all the way back to 1993. That's all that money. That's people's, housing and all the stocks they made money off of, all this stuff, right? And when you look at it, though, they're the biggest buyer, right? They're the biggest buyer of everything. And when they start to slow down, that's when things get bad. But I will say this. Things must be good for these folks because look at this right here. This is on the website of Caesars. I cannot believe it was on the website, but it is. You can look this up. Nobu Sky Villa Emperor Package. All you need is $5 million. This is for a weekend, if I'm not mistaken here. You'll get a limousine, a couple tickets to something, but you're going to drop a cool $5 million for one weekend. That is people with some money. I mean, look at that. A weekend. That's all it is. Not 7 days. You get 2.5 for $5 million. Right, and I can't believe that's literally on their website, guys. You can go look it up. Just crazy. And now, these are some things to really understand, because I send this out to the members for sure to know this. We're entering November, right, which is one of the best months of the year. I showed you yesterday, right, for seasonality and all that good stuff. CTAs are now short 25 billion in U.S. equities, one of the largest short positions in 8 years. When you see that chart, you see the arrows, you can see, and you can look down the dates of when those were, right? Doesn't signify a bottom, nothing like that. But buddy, when things get super bearish, what usually happens? Okay, shorts get crushed. That's what happens. And so you can see these dates right here. I assume you know what those are. If not, look it up. The other thing you're looking at here is NAAIM exposure index. This is how much they're actually underweight on equities and stuff, down to 24, right? You start getting in these kind of levels here. That is September of 2022. October is right above it. This obviously is March of 2020. When you look at this, if you pull this up on your own, as you can, and you compare it to a chart, it doesn't signal a bottom normally. Usually, maybe you do get a pop sometimes, but usually your bottom is very close to a rally. It doesn't mean there's a bottom and the market's going all-time highs. Just to a nice short covering, rip your face off rally. Just pull up a Nasdaq chart, go through, you can scroll down, look at the dates, and compare it yourself. And there are big rallies to be had when you start getting down in these low numbers, okay? So just make sure it doesn't signify a bottom of anything. It just signifies you're in the area, probably 7 to 14 days out. Maybe we're there now. We'll have to see, because obviously FOMC's done, and all we got is Apple tomorrow, and after that, you really don't have much of anything going on until NVIDIA reports, right? Now, very important to understand this. And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. This is the market, folks. Look at all these stocks. They're either red, and by the way, we had a huge green day today, right, on the SPY and the Qs. Even the Russell ended up turning green. But when you go down here, you can see the sectors. I got these basically broke down to sectors, okay? Transportation, travel, materials, this kind of stuff, retail. And when you go, okay, well, shop looked pretty good. A lot of high beta stuff got crushed today. Just a lot of stuff's either flat, barely green, or it's red, right? And you go through here, Pinterest was up 20% yesterday. You don't expect much, right? All these other stocks were up huge yesterday. They're red or flat today. You go through, Chinese stocks got crushed again. No bid, except for the 2 EV makers. They look pretty good, right? And you go down here, obviously these are all green, they're red, fintech's a hot mess. You keep going, and then semiconductors, right? So this sector, we're going to get into a little more here, was green, but then look at what the market is. Here it is right here, folks. Your Magnificent Seven, okay? Because just one of these, like Microsoft being up 3% because it has a 7% weight in the S&P is like a DraftKings being up 200% in one day, basically, because it has no weight, right? I'm just making that number up, but seriously, look at the green. Like when you're seeing these big mega caps up 2 to 3%, and you got an AMD up almost 10, and it's not even part of the Magnificent Seven, then yes, you're going to have a super green day, and you're going to think the whole market must have just went crazy, when that's just not true. That's just not true. It's only a couple sectors went, balls to the walls, excuse my French, and that's what happened. But that is the market. That's all you need. All you need is semiconductors and the Mag 7 to just pull the whole market up and keep dragging it on up, while all these other companies whose earnings are either okay or missing, just end up flat or red. It doesn't really matter. We've seen it all year, and that's what you're seeing again, right? Because you got to understand, not only do you have a lot of bearish sentiment, what's happening with these Magnificent Seven right now? Almost every one of them except for Apple are doing stock buybacks again, especially the ones that dropped. They started buying back stock. So you got to remember that. That is bullish for these stocks in particular. And I'll show you a chart with PayPal tomorrow to show you what I'm talking about when I say stock buybacks, because they ramped theirs up considerably. Now, the S&P, what we talk about, drop below the 200. You can look on the weekly, daily, whatever you look at. I said what I say. We're going to retest. We're going to retest. It always happens. I don't show you the charts because for my health or anything. And what happened? Here we're back above this 200. We closed above the 200 on the daily right there. Again, you can pull up the weekly. It doesn't matter. Same thing. And so here we are. Now we're going to continue. That's what we got to see over here to the left. These are fair value gaps. Look what those are. I just did a video for the members on this. It is confusing sometimes, but this is what the market hunts out, right? So I want to look at that level right there, which seems to be about 428 on the SPY. If we can get above that, and then you got me really interested, right? That's only 1.47% away. You see some nice resistance there if that's the case. Probably where the 100 moving average is as well. And maybe we get close to that trend line. So let's see what that looks like if we can get there. Again, Apple's report tomorrow, so that'll let us know at this point in time if that's going to happen or not. Again, we're in November, and usually the second day of November is supposed to be super green. Now, the Qs, if you look at this right here, here we are, huge move up, back in this falling wedge right here. And then when you look at what it's entering a RTH gap, which is a regular trading hours gap. It means it gapped down last week. And usually these, especially the down gaps, will get filled on the way up. So it's in there now. We'll see if it can complete that tomorrow. Again, looking to the left, right around like 362 right there is a fair value got to be mitigated. So I want to see what happens when we get up there. Again, you see plenty of resistance at 362, right? This one, of course, never fell below its 200, so keep that in mind. Now, look at AMD. Woo, boy, almost 10%. Look at that daily candle. I went back like months. I don't see anything like that. Like, it's not one of these stocks that usually go up double digits. And again, I think it got a 9.78 or something percent for the day. But again, above the year-to-date anchor and VWAP, 2023 is low. Then you're looking above the 200, above the 100 now, and then it ran to the 50. That's basically where it saw resistance. But that 108 area is where it was just trailing to like all day methodically, right? Above, and now of course above it, does this mean anything? We can't get past 110. I mean, this area, like 110 to 112, 13, somewhere in there, we tried it 5 different times and failed. And so again, this is important because if you look, seasonality, and I'm going to get to this chart, for semiconductors is bullish for November and part of December. And so that is starting to kick in. Obviously, you see usually that last day of October going to first. You see the big spike? Well, we got that on AMD. Qualcomm just reported it's up in after hours. That holds. Guess what that's going to do? Same thing Intel did. It's going to drag it up. Now, the VanEck Semiconductor ETF right here, which thank you, somebody in the comments corrected me. I don't know why I said that was a bull flag. It's not a bull flag. It's just a declining channel is what it is. And I think I said that in 2 other videos. And for some reason, I saw it on Sunday's video, I think it was, and said, oh, it's a bull flag. No, it is not. But it's a perfect bounce point we talked about, right? And that's exactly what's happened. So this right here has got pulled up from NVIDIA. It's got pulled up from AMD and all the rest of them. And so if it does continue to move up, 146 is where you're looking at. Some resistance there. If you look at the weekly, though, and pull out, you can just see it's in this volume gap, right? And what happens in a volume gap usually? It gets sucked up pretty fast. And so again, probably 147, 148 is where you're going to see resistance. 150 is the top of that channel right there. And so let's see, because NVIDIA doesn't report, I believe, another couple of weeks. If I'm not mistaken, please correct me in the comments right there. Now, Amazon has been on a tear since earnings. I mean, this thing is sitting up there, 14%. Wow. So it's above all its moving averages now. Filled this gap, left another gap behind below. I mean, I think it's left a whole boatload of gaps behind below. But again, you can see the resistance is thin right here. So 137, probably going to be your next level to watch out for on that one. If we go out on a weekly chart, I mean, you can see it can move, again, pretty fast. Like one thing said the other day, 143 would be a nice target to fill that gap before it hits that trend line right there. And so let's see if it can move or keep moving for the next week or two and get that target. Now, Tesla, very interesting here. It drops this morning, comes back above the 200, closes out really strong. And what we need to see is that's accumulation right there. That's distribution. What we're looking for is accumulation. Accumulation means it accumulates and moves up. Distribution means it looks like accumulation, but it ends up selling down. That's distribution. That's what we're looking for on NVIDIA, by the way, to see if it's distribution or not. Now, again, it's above, back in this falling pattern right here. You can see above 200, which is good. Trying to mitigate this fair value gap, that big old red candle right there. And looking at this one, I mean, what you're looking at is anywhere from the 194 to 214, that $20 area, where it maybe will accumulate before moving up. And I'll show you the event it may move up on. Or is Tesla just going to go crazy and all of a sudden we're going to start getting short coverings and call volume flying in and all this good stuff, right? Because it really had a strong close today. I still say the 188, 186 level is in play if bearishness continues, because trust me, the bears are still in control of a lot of these stocks. What's making the indexes green again is the Amazons and the AMDs and NVIDIAs and all these stocks, right? But I think you have an event on November 30th. It's pretty far off. But that's when you have this Cybertruck event, and sometimes you see that with Tesla where maybe it accumulates, right? And then it gets this spark. Now, I know we're in different times where, if yields start going crazy again, then that's probably not going to happen. Now, looking at Apple, they report tomorrow. Again, you're in this falling wedge right here. There's a target way up there. They bounced perfectly off the bottom of this wedge. I believe it's up like 6% since this bounce right here, so it's been a very nice down. It's up about 4.5% since the bounce. There's the top right there on 178. But again, if they report good earnings, this thing's going to fly through that with no problem at all. Should they hit numbers? with everything going in China? I don't think so, but you can massage numbers like crazy, and they usually don't guide at all. And again, if the market wants to go, it's going to go. It doesn't matter what's going on in the world and everything. We know this. Now, when it comes to earnings, you're going to have a lot of high beta stuff. Palantir, Shopify, Lilly, Crocs, Moderna. Then you're going to end up with, after hours, Apple, Block, which needs a bid for God's sakes. DraftKings, Carvana, I can't believe it's still in business. Am I the only one that can't believe that company's not bankrupt yet? Fortinet, Starbucks, Coinbase. Of course, we all know Bitcoin's been absolutely pumping, right? Then you'll have Cloudflare. And then with economic data that can move pre-market here, it's going to be continuous jobless claims, initial jobless claims, and then you'll have, after we open, stuff that's not going to matter. And so we get to see if we get continuation today. Again, it was a really green day. And November 2nd, historically, literally, it's almost like all the time green. I think only like 2 times in history it hasn't been green when you had a red week the previous week before. We had 3 red weeks in a row right there. So again, in closing above the 200 on the S&P is a bullish thing on the SPY, and the Q's never hit it anyway, so it doesn't even matter. But we'll see if it's a retest and we head back down, or are we going to start heading back up and mitigate some of those fair value gaps, start getting a little more bullish because it is November before it decides to probably take us back down. Because the economy, I'll show you some data tomorrow, it sucks. It really does. Like manufacturing data is horrible, and even the services data is coming in bad, right? So again, this market is still at this point in time 7, 8, maybe 10 stocks, somewhere in there, as I showed you. But that's just the way it is. That's the market we got to play, right? So that's what you got to keep doing. So put in the comments if you think it's going to be green or not tomorrow. History is with you if you say yes. So anyway, hope you guys got some out of this. Please hit that like and subscribe button, guys. I really appreciate all you guys, and I hope you have a great night, and I'll see you tomorrow.